for more on America's jobs struggles and the broader global recovery. Joining us now from Edinburgh is Colin McLean. He's Managing Director of SVM Asset Management. Colin, thank you so much for joining us. How do you position yourself? I mean, it's quite a down day, but of course what investors are prudent about is that US jobs data. Is that going to change the way that you see investors piling up some equities?
No, I don't think so. I think the market's really waiting to see what form of quantitative easing we get. I think it's right to stay fairly fully invested at present. So it's not really going to change our views that much, and we're quite encouraged that market volumes have been picking up a bit over the last couple of weeks.
Colin, what kind of transaction, I mean, what kind of industry group are you looking at? As you're saying, you know, a lot of the focus is on QE. When do you expect it to be on, be on callback? And what happens if actually this jobs data is so good that they don't need QE anymore?
Well, I think the dollar's low enough to stimulate US exports. We've seen that in the data earlier this week. So I think that's set in place even if we don't get more quantitative easing. We're still quite focused on resources, to a large extent the precious metals, gold and silver, but also base metals. And the oil and gas companies that are drilling have had quite good results in recent weeks. And I think we may even see more M&A in that sector. So resources overall is an area we still quite like.
What do you make about these, so-called currency wars, which some investors and certainly some analysts still refute to call currency wars? Would that actually focus your attention on a lot of the emerging markets?
Well, I think the markets generally, don't like to see trade frictions at all, and we're going to get some of that in the run-up to the US elections. There's certainly potential legislation and a lot of comment that might indicate more protectionism from the US, so that's certainly not a helpful background. I mean, offsetting our more positive stance in resources globally is quite a cautious stance on the banking sector and financials, but particularly on the investment banks. So I think we're still quite cautious in that area, and I think that helps to offset our optimism elsewhere.
And this is regionally across the world, both in the US, but also Asia, US and UK, or Europe and UK, or is there something that looks actually more fragile than the rest?
I think it's more broadly based, certainly both in Europe and the US. I think the investment banks, I think we're going to see some of the third quarter results coming up in another week's time, and I think they may undershoot and miss numbers. So I think we're going to see some weaker numbers there from investment banks. And I think in Europe this issue about Greece and some of the peripheral economies is still unresolved. I think we still do need to see something done about that and see what the impact is going to be on some of the banks in Europe.
Colin, at this point, would you rule out a double-dip recession?
I think the global economy is fragile, but it is still recovering. I don't see a double dip coming, and I think 2011 could still see more upgrades on earnings. So we also expect more M&A activity. So I think for quite a lot of industrials with global exposure and with the cash around, I think it could be still quite a good environment through to the year end.
All right, thank you so much for that.